Hey guys, good morning. I'm going to do a little bit of a deep dive explaining the concept of these parameter ranges. And basically, I can take a bell curve of any time period. So if you want to take the first 15 minutes of the RTH trade session, you can set a bell curve to represent what the last 14 times the first 15 minutes of the RTH session traded and create a custom bell curve of just that distribution. Or if you want the first 30 minutes, 8:30 to 9, you can set a bell curve for that. Or if you want the first hour, which is very common for the hedge funds, that first 1 hour initial balance, you can set a bell curve to just represent the last 14 sessions of the first hour of trading. And that way you know where you are inside the distribution. I've set this up so that we always open on the mean, the zero. So I set up my bell curves. If you want a distribution between 8:30 and 8:45, you're going to open at zero, from zero to infinity. So I'm setting it up for us to get the maximum possible benefit from this. And if we know our statistics, we know that inside the 68% represents two 34% halves on each side of zero. So if we start here, we're either going to go here or here. And how we get there, though, is subject to being up and down, up and down, up and down inside the curve, because inside this area is rotational. It will get pulled back and forth to the volume clustering on zero. And whichever way if you can get a good cluster of volume on zero, any which way that it breaks from that area on a larger time frame, like a weekly or a monthly or a daily, or a Globex range breakout of PT3, or turn around, I can show you these spots in these distributions where it's very common for the algos to try to reach these areas and then make that pivot decision whether they're going to turn and go back inside the distribution or break and go into the wings or into the tails. And I've set my indicator up to be able to take these out as far as I want, 6 sigma if I want. Adding tails is not a problem for this indicator. You can add as many as you want and set them up to execute. Once you get a big tail event, then you can take it all the way to the end, because you know where that is in this distribution measured. From this distribution, you can set it one time, you can set it 2/3, 1/3, 25, whatever floats your boat. You can put your number outside the tails of how you would like to trade it. And just knowing that you're there for one, for instance, with high volatility or medium volatility will tell you a lot what to do once you're outside the tail, and how to adjust to see if price is coming back in or going to go further out for an extension. So I wanted to also mention to you that there is an open and a close of these ranges. So the range on a weekly will open here but may close here. So there's going to be a difference in the distribution. And I want to show you that today. That's what this lesson is about. You have a double distribution, whether you calculate the bell curve off the open or the close. Think of the concept of your pivot points. You can set your intraday pivot points to calculate from the daily range or the intraday range. You can calculate these bell curves from the open or the close of the range, and then nest the distributions inside of larger ones. And then you have a plethora of levels to hit if you're trying to develop, you know, systematic algorithms to trade inside and outside the range. Many ways to do it. So let's just take a look at the opening close of these ranges, and I think that that would help you understand this a little bit better. Here is the monthly, weekly, daily in crude, and you can see that the monthly level acted as a very good, strong resistance at 11 a.m. on February 10th, and pulled back to the weekly. Finally broke this weekly, had been, acting as resistance, and then it broke through again. So it just rolled up and down on this weekly inside the one. Do you see how it stayed inside the one? The opportunities come when you break outside the one, especially on a higher time frame, right there. Here was a failed breakout, but it did get a little far. I mean, it went from the 1 to the 2, and so that I would call that a winning trade because we went right to resistance. There was a buck $1,000 move right there. So knowing where you are inside and outside the distributions, and especially if you're at a location where you think that you might get a support resistance bounce off of, then that's something that would be actionable, and you would want to know where you were. If you're inside a distribution, like I said, it's going to be rotational up and down, and as you see here, it's exactly what it did. It went from up and down and up and down and up and down and up and down, and then back out and in. So it went from the 1 to the 2, very common. That's your bread and butter move right there. 1 to the 2, another buck. So if you get a pattern that you want to trade, put this on a micro account if you need to. Backtest it. You can control the volatility and take the range breaks when slope is going up. And this one, the slope just started going up when it broke out. I don't know if you can notice that. But right here, big change right there. See that big? As soon as real time you start breaking your range, you don't have to wait for the bar to close. You'll get the signal and take the trade to your outer level. And it works best for, like I said, the higher time frames. But if you don't like trading a 60-minute bar and want to put it down on something more reasonable, like a 15-minute bar, it makes it a little bit easier because then you can get really inside the change when it's happening and take advantage of these moves more granularly. So here's this nice breakout, and you can see the nice slope up. So to get that to work in Bloodhound, it is super easy. I want to show you the slope as well as the threshold. So, and show you the difference of the two intraday ranges. So first put a new chart up. I'm going to change this back to 15 minutes. Hang on one second. I right click, go to indicators, go to the JATS indicators folder, put PT3 on the chart. And I've got a template set up, help you set up your templates. And first I want to look at the 1 hour IB Globex close. And this calculates the range on the close. And there is a second way. So this, after the 9 o'clock bar closes, the distribution will open. But I like to get the distribution when it opens at 8. So I have a second one that I'll add to the chart. Got a template saved for that. And this one is calculated from the open. So I get a box right beside it. And it's very, very useful to provide these levels as targets intraday to trade to. It's just taking a statistical model outside the standard deviation of the distribution. It's that simple. So with that said, there are certain assumptions that we could make if it is trading above or below the 1 hour IB or the Globex. You might consider a directional trade, like you see it setting up here. As it's trading away from the 1 hour IB into the target. First it got to the 2 and the 3, and then to the tails. This was textbook. And then the Globex can be added. The nighttime Asia session. This is the London session. Let's see. You can put any time frame you would like. I think it was 2 to 3 though. Yeah. So you can customize the distribution that you would like. And again, keeping in play that you trade below the ones. Here the ones are in purple. So it shows you the progression. And here's your slope. So I've taken the lesson 2 Bloodhound template that we created for our upsloping 17 vol. Well, if you notice that crude has a different threshold than the 15-minute NQ, so you would probably want to use a different threshold. And let's see. You need to do like I do, the eyeball test. Scrunch up the chart so that you can see when these distributions start taking off what that level is, and see if you can find a pattern to be able to take advantage of the next slope. So sort of become a slope rider. That's pretty cool, slope riders. And let's see if we can jump in these as they're forming and get in on the right side of these moves. We want to put ourselves in the best position possible when that happens. And we can see when that happens. This is our edge, right? So here is the threshold from the lesson 2. All you have to do is file, save as, and name it lesson 5, crude double Globex. Say OK, and then you'll have lesson 5, crude double Globex. And we want to change the PT17. So all we have to do is just come in here and change the number. And we're going to find that magic number for the crude contract to do this. So it wasn't 17, but I like it around these levels. Let me put my horizontal line down here, and there's 15. This was sort of like 10, 12, 13. Yeah, I think it was 13 that got it kicked off. I'll split it in the middle. Oops. It needs a dot. Put it at 13. There we go. Okay. So that works for this one also. It doesn't work for this one though. It got us in. Yeah, it did. It actually did. It got us in up here. Very cool. Missed these, which is good because it didn't go anywhere really. Here was the move, and it would have caught that move here. So yeah, so this looks like a good level. So let's just, eyeball yourself doing like I'm doing. So I'm going to use 0.13. So I'm changing this from 17 to 0.13. That's all you have to do. Now we have the exact same template, but for crude. And the other change I'm going to make is the Globex. We have to adjust what the crude Globex is. It's not 830. This will need to be adjusted to 8. 130 to 8. 130 to 8. So you have to delete all of these and then hit your control button with your left finger and drag it over. So there's Tuesday, Wednesday, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so there's our revised Globex, and that's from 1:30 p.m. to 8 a.m. Central. I'm using Central Time. And then your RTH session needs to be changed to the where's my NYMEX? Sorry. Oh my god, RTH 1, 2, 3, 4, 5, 6. I have no idea. Well, let's try one. And it's from 9 to 2:30. That'll work. I guess that's Eastern Time, so that'll work. Alright, so there's our NYMEX. We'll even name it NYMEX to make sure we understand. This is for crude. Okay. So you're going to need to subscribe to NYMEX data to be able to get the crude template to work. And so there we have our template set up like the other one. And to show you the slope, what that looks like, there's our slope. So all these moves we can now get in order, because this is our permission to trade only when the slope is up and above our level. Yep. So then when you put the rest of it together, getting a long slope off of it, so it had to inflect up to get the signal, and requiring linear regression. If you don't require linear regression, you get some more signals. I'll take that off for crude. Just use momentum. And if you even exclude momentum, you're going to get more signals. But you get a lot more false signals too. So I like to use momentum for that reason. And you can, weigh it for yourself, whether you want to use it or not. But just knowing that when you do get a signal, you're going to, and then save your template, you're going to know what it is you're getting. You're getting long ball above a threshold level, and you can use this information to take the number of points or ticks or pips or whatever they are that is available in that range statistically using these quantified methods that the PT indicator can do. You can either do that discretionarily by doing the calculation and setting the chart trader to trade to your levels, your number of ticks or pips, or you can ask Blackbird to set up a Blackbird template to automatically take these trades in a session that you would like to trade. And I've got this template set up to be able to trade Globex or the RTH session. So if I just want to limit my trade to this time period, I can do that with the algo. So copy your logic and create a template for it. Name it RTH session, and then pop the RTH session template into it. Copy this, and then name this Globex session. Remove the NYMEX RTH and put the Globex that we just created right there. Save your template. And now you have just nighttime trading. So now you've got nighttime versus daytime. And this is where you need to experiment with your market and try to find the sweet spot that will get you in to the volatility but allow you to stay in and not get shaken out. And a lot of that is understanding the dynamics of the ranges, where the algos are going to end up. What are the ranges? Where are the boundaries? See that right there? Went to the edge of the range, came back in. and understanding when the deceleration of your oscillator comes in. And once you see it starting to fall, then you know that volatility is coming down, not going out. And that makes a big difference on, to stop trading out, right? I'm not saying turn it around and trade in, but definitely reconsider long outs at that point until it would probably break the three again. But here you can clearly see that just using these intraday ranges works fantastically well in the intraday time frame to know where to trade to for profits, and or if you have broken the range, how to trade to those outer targets. So this is the Globex open and close. There's another distribution that you want to add to your chart, and that is the daily. Because the 1 hour IB is going to go to the daily targets also if it gets outside the distribution. Try to. And if you break, your daily three, then you definitely know you're in a wings hedge. I mean, yeah, you would probably either hedge or buy calls with both hands and fists, right? All the way up. So just being able to trade the slope directionally, coming up with some sort of strategy to do that. I personally don't like to trade short ball short, but I don't mind trading short ball long. So here, let me put an OR node up and pop another PT2 slope solver on here. Put another long short modifier on. Let's call this short. Connect it. Here's the momentum. And this is RTH. And I need to do this in Globex. PT2 slope solver, long short modifier. Change it to short and enable short false. Go back and check that other one. Kind of went through it quickly. I'll save. Yeah, forgot. Enable short false. I don't want the shorts. But this will allow a short volatility to go long. See right there, it went down and my signal stayed long, going to the target. But then I got the down signal as it picked up going off the level, so that worked out beautifully. Look at that. A very nice up and down. So the targets of what I trade to aren't so much going to the edge. Well, I pay attention to where these range edges are, but I'll take a statistical difference of what is available inside that distribution that I'm trading in. So these are 30-minute bars. So I know what the distribution is per bar or per, a range of bars that I set for the distribution. And I'll know then how many ticks, points, whatever you call them, are on average to print in that time frame. And because I know that information, then I don't have to go to the edge of the range to set it for a systematic profit or stop loss. I can set it for the low-hanging fruit, the easy to get to, and, select a lower level. So I can select to get, a third of it or a fourth of it, knowing that I might have a really good chance of hitting that. And there's also other tricks that I can do. I can go and move the profit target. So the profit target starts at the bar open. And if I'm trying to get, let's say, 40 ticks, there's 90. Well, this looks tiny, doesn't it? But, 40 ticks. Here we go. So if I'm just trying to get that as a target to see if I can get to that fill each time systematically, a stop or a loss, and maybe martingale one reversal at that level to see if I can get it to go back up. You can, quantify these and do them over and over and over and over on each bar. You can set it up, to capture a distance and a range is what I'm trying to tell you. So I set Blackbird up to do that, and let's back test this. So put Blackbird on the chart, and we need to modify our template. And we were working with the the 15-minute long ball 2. Long ball lesson 2. So what we want to do is save as, call it lesson 5 crude, and then we need to bring the template in. So we'll open our new lesson 5 template and say OK. Now we've got the lesson 5 template, so we can rename it, and this is over 0.13. And I forgot to change that name in the template. Okay, so now because I've set those Globex and RTH orders, we're going to copy order set A, B, and C and duplicate it on the right side. So I'm going to copy order set A from A. I'm going to copy order set B from B. And I'm going to copy order set C from C. So now I have a new DEF. So let's name this by clicking on the gear, and this is going to be RTH, or let's say Globex A. Globex A. Here's Globex B. Here is Globex C. Here's going to be RTH A, RTH B, RTH C. All right, now for the market entry, instead of place immediately, we're going to go to our bloodhound signal. We're going to lesson 5, and we're going to choose the Globex that we just saved. All right, and do the same here, except for this one already has another placed after. So we're going to add bloodhound signal and choose the Globex. And this time we have to put the Globex on top, and it's going to have to be in sequence. Well, we're going to leave the order status changed on top. I put that back. And if the order status changed is okay, if the A profit target got hit, then it also requires that the Globex, it be in the Globex session. So that's all I have to do there. Same for C. I'm going to add, no, I'm not going to add the Globex here. C doesn't matter because C is reliant on B. So for A, so this one I'm just going to put order C. Or call it entry C. Well, it doesn't matter. It's not going to get executed. Alright, so RTHA, if we have this set up correctly, I mean, always sim test it, but the objective of this order set C is just a placeholder to close the strategy of the order set B properly inside the Blackbird. It doesn't get filled to ever execute a trade. Okay, for RTHA, we're going to add the Bloodhound template. Do the same for B. Go to Advanced, add Bloodhound, Lesson 5, RTH. And we have to change this to all in sequence. And with those two changes, now we've distinguished the RTH from the Globex. Now, the Globex is going to be a smaller and a different time frame. So we've got to change these three solvers. So this time frame needs to be adjusted to the right time frame. We're going to have to adjust the right side also. So the time frame from Globex is going to be from 1330 to 8. And if you wanted to make it the London session for a 1 hour IB, you could do so. And get a smaller target to trade to. But we'll just use the well, you know what? Let's do that. Let's use the 1700 to 1800. Let's do it this way, 1700 to 1800. Okay, and for the stop, do the same thing. This is Central Time, so if you need to make an adjustment to make it your time, do so. This is Chicago time, when the market opens back after the maintenance. Okay, so I'm going to do the same thing here, 1700 to 1800. Okay, do it to these two, even though they're not going to get executed, just so they don't throw a, oops, a mismatch somewhere. Okay, so for order set, this one I need to change it from 8:30 to 8:45 to 8 to 9. Or you can make it 8 to 8:15. We're going to try 8 to 9 and test that. And if we need to move it back to 8 to 8:15, we can do that. 8 to 9. Alright, all the configurations have been made. Save and close. Now we've got a custom template that will execute in the right time frame for, dynamically shifting the profit and loss. So the profit and loss for the RTH session will be larger than the profit and loss for the Globex because those ranges are wider. And so that helps dynamically shift the algo to be more favorable because you can get the actual distribution for that time session. So let this calculate, and when it comes back, we'll take a look at it. Here it is. And change your logic back. And not too bad. Looks even. That's what I like. 134, 833, 2.07 profit factor, 64.79% profitable. So that is the 1 hour range. And with the 1 hour range, you can trade it different ways. This is a 30-minute. If we put this on a 15-minute candle inside of an hourly range to hit those profit targets, we'll probably get a better performance. Let's check. But that was not bad on a 30-minute bar. And I guess, if you have a large enough budget, you could run multiple distributions at the same time. You could trade a 30-minute with a 15-minute and a 60-minute, because they're all going to be hopefully providing a good structure to develop your own algorithm from. And I recommend that you put your other trend filters and things like that on here. So yes, we were able to get the profit up by changing it to a 15-minute bar inside of a 60-minute distribution by changing the bar size. 232 profit factor, 64% profitable, and a very good long-short mix. So let's put this on a 5-minute bar inside of a 60-minute range. And you can, like I said, go back in and change. Not, in fact, we'll do this so that we can get it all in this one video. We can go back in and change the time frame to the distribution to reflect a 15-minute range instead of a 60-minute range, and see if we can get a better outcome by narrowing the range that we're trading to. And we've only done slope and above or below a number, but we could do more with volatility by restricting if it's above a certain level. So say it gets really, really high, like right here. See how big, wide that swing was? Right here, this swing. Huge. Almost $2 to stay in the right direction to get to the target. And if you're carrying multiple contracts, that can be quite a lot in case something happened and it tanked and kept going, wiping you out, wiping all your profits out. So you can stay in your domain that you're happy and trading in by eliminating signals also. And that'll be the subject for another video, but I can show you how to do that. So let's check. Yep, got even more, a little bit more net profit. Shave down the profit factor a little bit because it's more noisier. When you bring it to a lower time frame, you get more noise, so that's to be expected. But still, overall, fairly good. I think maybe a 5 minutes a little bit too ambitious for crude. Doable, but like I said, noisier. You'll get more trades, commissions, fees, and in addition to bad trades with the good. So it might be better overall, just test that out to see if you get more of a better result with the 15-minute. But I really do like the 15-minute as far as being able to see this slope. And you don't have to use these numbers that I'm using. You can change it to your own time frame. In fact, we were going to do that. So here, like that, got it back up. 232 profit factor, 64. I didn't show you the very nice. Very nice. And here the cumulative profits. That's a very nice, just look at that. I'm scrolling and there's, yeah, this is a very nice. We could, dig dive in there and try to figure out what happened on that date and time to get the hit for the drawdown and try to, eliminate that. But otherwise, yeah, it looks great. Yep. So do your own back testing and always run a strategy in sim to make sure it's working before you do anything in a live account, and realize that these back test results do not represent future trading results. Volatility is subject to change and could change dramatically, rendering these results obsolete. So just understand what it is that we're asking the algo to do, and that is to trade when the range is expanding and trade directionally long or short inside that expansion. And I'm also allowing a short trade on short vol above the threshold without any other trend filters. So that's why I'm saying it would be even better results to put some other trend filtering on here, like VWAP or whatever you like to use. This is not meant to be a canned algorithm. It's more or less a base for you to be able to come in and pick up other trades. There's further techniques that we can do. We can save as, and then do name this one 1 hour IB, and then I'm going to hit save as again, and name it 15-minute range. And this one I need to go back in and make some changes. So we're going to change. We're going to leave Globex alone, but in the RTH, we're going to change it from 9 to 8:15. So there was the profit and stop. Profit. Stop. And I want to compare a 15-minute range to a 1 hour range and see what the performance difference is. And this will help put in your mind these differences. And you can look at them on your chart and understand what it is you're doing inside the range. Okay, save and close. Right click, reload Ninja script. Give that a few seconds to calculate. The one thing that you don't want to do when Blackbird is running calculations is to try to open another chart or to look at something else. That'll mess up Blackbird. So just the best thing to do with Blackbird is to put up an empty workspace with no other charts or anything open, and just run it individually like that, and not mess around with your other charts at all. All right, so this got us a little less profit, but a much better profit factor, 257. So we've got the best profit factor by narrowing the range, making it easier to hit the target, but a little bit more noise. And because of the narrow range, you get the narrower profit. So it's not more noise. Let me back up. We hit our targets, but because the range is narrower, the net profit was smaller, but it increased the profit factor. We were hitting the target more with this smaller range. So, and it's very even. So the 15-minute range between 8 and 8:15 a.m. looks very good. A little noisier, but that's to be expected. It's a smaller range. So put this on, that's a 15-minute. Put this on a 5-minute, trading a 5-minute bar inside of a 15-minute range, and test that. And this will be our last test. And something else that you need to be aware of during a trading session, you could either code Bloodhound for these instructions, filters per se. You can set up a filter to say, do not execute any trades above the one long, right? Block one. Only permit shorts or something like that. You could code anything you would like anywhere inside the distribution and use those additional permissives by dropping them into the place after logic node. So you can nest as many conditions as you want to add to your algorithm. And that's something that I'm working on additionally myself by having very specific trade location entries. And this last week was very nice. The 5-minute inside of a 15-minute increased the total net profit, allowed us to get to that 15-minute range even better, and a profit factor of 2.2. 60 again, 63%, 60% profitable. Both long and shorts are very even, and everything looks pretty good for you to test this one on your own. All right, so we'll start meeting once a week, and hope to record those so that if you're not there, you can see what was discussed, and Q&A and interaction. So thank you very much, and have a great weekend, and we'll talk at you soon.